What if your employee is reviewed as more than just a payroll expense, but if the way that you pay, support, and structure your team could actually help lower your tax bill while improving retention, morale, and loyalty too? If you're a US business owner with employees or thinking about hiring and expanding your team, this is a part of tax strategy that you don't want to overlook. This show is where we legally help people shrink their tax bill and keep more cash in their business. I'm Chris Middleton from MakeTaxesFair.com. Today, we're breaking down the employee pillar of the Clear Edge framework and why your team is more than just an operational expense. It can be a tax planning conversation that we should have. So stick with me to the end and you'll walk away with a high-level understanding of how employees impact taxes beyond payroll, where business owners miss opportunities, and how to think more strategically about compensation, benefits, and retention. Employees are one of the E's in the Clear Edge framework, right? People are often one of the biggest investments that you make in your business, your team. But for many owners, payroll is where that investment stops. They think, oh, I paid the wages, I ran the payroll, I paid the payroll taxes, right? That's the end of the story. Well, yes, your employees are an investment of money to cover payroll, but the right strategy centered around your people can do a lot more than just fill seats and keep them coming back to work for you. It can help you attract better talent, retain key people, reward employees more intentionally, and create business deductions beyond just the payroll costs. And in some cases, can create meaningful tax advantages for you as the owner as well. If you're going to invest money in your team, we think it's worthwhile to learn how to do it in a way that supports your retention strategy, your business growth, and your tax strategy. Tax smart owners are asking better questions like, am I compensating people in the most efficient way? Are there benefit strategies that I could be using for my team that I'm missing? Am I rewarding loyalty in the ways that also are documentable and can create tax value? Does my entity structure allow me to use all of the employee-related tax strategies? And as an owner, can I participate in some of these benefits too? Once you understand that the code gives you ways to support, retain employees more intentionally, you stop seeing payroll as just a cost and start to see it as a broader tax strategy and broader business strategy. At a high level, the employees pillar looks like things like this: wages and compensation structure, fringe benefits, accountable plans and reimbursements, health-related benefits, retirement-related benefits, family employment strategies in the right situations, hiring your family, kids, spouse, parents, those types of things. Ways for the owner to participate where the legal structure allows. Let me be clear, this episode is not about every technical strategy or rule that affects the employee pillar. We'll hit specific tax strategies in future episodes, but today is about seeing the category clearly so you can stop leaving easy opportunities on the table. When you pay employees, wages are a deduction in your business, right? That part is really straightforward. Where it gets interesting are things beyond the simple wages, such as benefits and reimbursements. Because now we're talking about how you pay people plus what you can provide that is tax advantage to them and how those things are documented and structured. For example, some benefits may be deductible to the business. Some may be tax-free or tax favored to the employee. Some strategies can benefit owners if the entity legal structure is set up correctly, and these opportunities are missed entirely if you're not thinking about this category, if there's no system in place to address them. Reimbursements are a big one. A lot of owners either pay for things personally and never clean it up by getting reimbursed, or they run everything through payroll as wages to themselves or their employees, or they reimburse expenses informally with no documentation. The lack of clarity can create chaos, and chaos creates wasted tax, payroll taxes that shouldn't be paid, etc. The way an expense is paid and documented affects whether it stays deductible in the business and whether it becomes taxable to the employee or you as the owner. And so that includes you in certain cases. So this is not just an administrative issue, it's a strategy, it's an operational issue. The employee pillar is often ignored by business owners or missed for a few reasons. Many CPAs are focused on filing the return correctly, not designing compensation and benefits strategically. Having a conversation in April about employee benefits for last year doesn't help reduce last year's taxes. And busy owners are busy. They're exactly that. They're making people happy, getting work done, making sure payroll happens. So strategy can get pushed aside. And a lot of people think, that's for the big companies. I'm not a big company. Well, you're wrong. Not every strategy fits every business, but plenty of powerful moves exist for small and medium-sized teams if you know where to look and the questions to ask. Here are a few broad opportunities, right? Better benefit planning. You're already spending money to support your employees, but it may not be structured in the most tax efficient way. Things like childcare reimbursement, home office expense reimbursement, and employee achievement awards can really help employees cover some basic costs of living tax-free. A reimbursement strategy or policy that's clearly defined creates structure instead of chaos. Instead of sloppy or informal handling of expenses, a formal accountable plan can generate cleaner deductions, tax-free income to the employees, and ultimately tax efficiency. Owner participation. With the right structure, owners can participate in certain employee-related strategies, and your legal structure and documentation matter here. Family employment. In the right business and under the right facts and circumstances, employing family members can be part of a broader planning strategy. Has to be real work, age appropriate and documented, but this can be done and done correctly. Retention and culture. Some wins are indirect, using tax-smart compensation to reward employees and people, improve retention to build a stronger team and grow your business without wasting tax dollars. Good tax strategy is not just about cutting the bill, it's about using the money you're already spending more efficiently and more effectively. That's why the employees pillar of the Clear Edge framework ties in with the other structure or pillars of legal structure, retirement planning, deduction optimization, getting organized, and efficiency. It all connects. If your tax structure is off, some of the strategies won't work. If your documentation is weak, benefits won't hold up. If systems are messy, plans are not fully implemented. These pillars are not isolated in silos. They're connected as part of the same framework and to help your machine move forward. Some of the biggest mistakes I see, thinking of wages alone as a tax strategy reduction, right? A strategy. That's not it. Treating employees purely as an operational topic, not as a tax planning conversation. Offering perks and reimbursements informally with no documentation. Not revisiting your compensation and benefits as your employee grows. And again, assuming that, hey, this conversation is for large companies, not me. Those assumptions cost business owners real money over time. Here's a simple example. Two business owners, similar teams, similar payroll costs. First business owner, they just run payroll and call it a day. The second owner runs payroll as well, but then they also structure their compensation intentionally to include the total benefits to the employees, using a formal reimbursement system, evaluating benefit options that are tax favored, and looking at how they as an employee can participate as well. Same headcount, same general labor expense, framed differently and a different level of planning. The second owner reduces their payroll costs, workers' compensation costs, by giving employees benefits that are tax advantage rather than just, hey, I'm going to give you a raise at the end of the year. The second business owner looks at the total package of compensation and not just the check that gets deposited to their team's bank account. That matters, but the fringe benefits do as well. Second owners, they're not playing games, they're being intentional. And over time, that difference in structure, documentation, and design adds up. This pillar is not just about saving tax dollars. Again, when you think strategically about your employees, you improve retention, morale, clarity, systems, and the overall strength of your company. When handled well, this pillar helps you reward people better, organize the business better, and ultimately plan your taxes better. It's a rare combination, but a powerful one. The big takeaway here is that your employees are not just a cost, right? They're an investment and a life source of your business. Your people are generally what drive your business, and that life source can be directly impacted by powerful tax planning category of the employee category in the Clear Edge framework. Again, the way you compensate, reimburse, support, and retain your team can affect your deductions, your documentation, your owner benefits, and the overall efficiency of your business. Not every business needs a massively complicated employee tax strategy, but every business owner should at least ask, am I handling employee compensation and benefits intentionally, or am I just running payroll and hoping for the best? That's a much better question. The goal is not just to pay people, the goal is to build a system where the money you're already spending on your team works harder for the business, supports the people around you, and fits into a broader tax strategy. That's what the employees pillar of the Clear Edge framework is all about. So the next time you look at payroll, don't just ask, hey, what is this costing me? right, in wages and payroll taxes, ask yourself, am I structuring this in the smartest way available? That's where better planning starts, that's where better retention starts, and that's how you start making bigger strategic moves. If this episode helped you even in one way to see your employee tax strategy and how that may be affecting your taxes, don't just nod and move on. That's how opportunities are missed and you stay overpaying year after year. Go to maketaxesfair.com/podcast to get the show notes and the free resource that we put together for this episode. We've actually put together a guide to help you think through employee-related tax opportunities, compensation questions, and areas that many business owners are leaving, where they're leaving money on the table. And I'll say it again because it's worth repeating, because this episode is not meant to drill down on specific strategies. Today was a high-level introduction to the employees pillar. Future episodes will drill down on specific strategies. But in the meantime, check out the resource for the show at maketaxesfair.com/podcast. We put that together for you because friends don't let friends overpay the government. So if you found today's episode helpful, please share this with a friend. I'm Chris Middleton. Thanks for being here, and I'll see you on the next episode.